The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the July 16th, terrific Tuesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. But first, I want to say thank you very much to Basil Chapman and to Tom for filling in for me for the last couple of days, Friday and yesterday. I am very grateful for all the work that they do. So let's go take a look at one of our tools out here. This tool is called Do You Love and Love What You Do, folks? Or said another way, work is love made visible. And that's what each of us do around here at TFNN. You know, Thomas Edison, he often ate and slept in his laboratory, and he worked 18 hours a day. I know some of you out there, you do the same. Edison, though, he's quoted as saying, "I never worked a day in my life. It was all fun." You know, folks, I hope that is the way that you live your life. Lyndon Baines Johnson, he loved his work, and when LBJ was the Senate Majority Leader, the Senate worked hard and late. Every now and again, one of his colleagues would complain, saying that Rome wasn't built in one day. Of course, I would say that my take on that would be that LBJ wasn't the foreman on the job for building Rome. Otherwise, maybe it would have been built in one day out there. I say, love what you do, whatever it is that you do, and it'll be like you are on vacation. Now, what I find interesting about the word vacation is that it's one letter away from the word vocation. And the Latin root of the word vocation is to call. So your vocation is actually calling you to find your work in which, in the end, you will help to find yourself. So vacations, or vocations, I will say, they call you, and vacations call you, vocations call you. No wonder Edison didn't feel like he worked one day in his life. I feel like I haven't worked a day in my life, and I missed not being here with you guys on yesterday and on Friday. So, there's great examples all around us of folks that focus on their vocations. Take a look at most surgeons out there. Most surgeons are so focused on their vocation that the healing energy of the universe flows right through them and into their hands. I know, I sure hope that it does. And how about assembly line operators? They can have the satisfaction of knowing they contributed to a finished product. The Wright brothers, they love the idea of flight. Their vocation produced the first airplane out there. Vocation, folks, is more than just putting in the hours to earn a living. A vocation is your most valuable asset and the greatest gift of yourself and your talent that you can offer to the world. I say, find your vocation, and you'll be on vacation for the rest of your life. Let's go check a look at the markets here. They were a little bit on vacation yesterday, a little bit on vacation here this morning. Not a lot of movement out here. Right now, futures-wise, Dow futures up 2 points, trade out at 15,417. S&P futures totally flat, trade at 1677.50. NASDAQ futures up 3 at 3,076. King dollar back about 29 ticks right now. Goldilocks, that's up $7, trading out at 12.90. Silver's up 9 ticks at 19.93. A little bit of movement here, obviously, in the euro, in the yen, in the Great British Pound. We'll take a look at those. Let's peek around the globe here, see what we have going on right now. Over in Germany, the DAX is off 33 points, trading out at 82.01. We can take a look at that stock chart. The FTSE basically flat off 5 points, trading at 65.81. Over last night in Asia, they had a little bit of a party. I say just a little bit. You had the Shanghai, that was up 6 points, about 0.3%. Hang Seng up, we're going to call Hang Seng totally flat, up 9 points, but they closed at 21,312. That can't exactly be an up day out there or a down day. We'll just call it a doji day, a flat day out there. The Nikkei was up 93 points. Our call-in number, 877-927-6648. Give us a call, folks. We can certainly take a look at your stock chart here. If we take a look at the ES Mini on the 30-minute chart, we'll just start off here. And at 4:30 in the morning, the bulls were out building candlesticks. They built one of my favorite candles, yours as well, that hammer candle. So that's what we've got at 4:30 a.m. That means the low, 1674.25. Should be good support out there. Hasn't been tested. Market really just traveling sideways here. Not giving us on the intraday chart on the EK EKG system of the market, the real heartbeat out there, any real type of indication of whether it wants to move up or down. We know where the area where the bulls are hanging out here, and that's going to be at that 4:30 session, 1674.25. So that means we really just need to go over it with a flat market, in essence, and take a look at the larger picture out here. Let's take a look at the daily charts inside the Dow, S&P, NASDAQ, Russell 2000. If we take a look, we'll start off here with the S&P 500. What we're going to see is that prices traveling still with inside that May 22nd swing point. You know, when you travel inside a swing point, oftentimes a significant percentage of the times you're going to go test the high. It's been traveling inside this swing point here, the May 22nd swing point. Price have been there ever since July 9th. Out there. That says the high should be tested. The high of that swing point on the futures contract, 1685.75. You're at 1677.75 out there. So you got at least another, what does that make it, 8 points or so for the market to move higher. Now it is Tuesday, and that means Tuesdays, the high percentage of the Tuesdays are update Tuesdays out here. So maybe we'll see the same. We'll see the S&P get up, test that 1685.75. Now if it closes above that, well, it will just be joining in on the party of certainly the Russell 2000 out there, and as well, I believe I don't know if it's a NASDAQ futures. Let's go check that. I know the NDX is certainly up over its May 22nd level. So that's where the S&P futures are headed to, whether it's today, tomorrow. They want to go tag that level. Same thing in the cash index, but let's go take a look at the Dow futures. Dow futures really trying to do the same thing. They have completed a 1 to 1.272, A to B equals C to up. Your 8 point on this. Coming in on June 24th, that low at 14,474. Your B point out here, that took place on July 1st. That was 15,012. Makes a 0.382 retracement. Let's go measure that. We're going to go from our A point here of the A to B equals CD up all the way to that B point, just slightly below a 0.382 retracement. That was telling us it had some energy. Didn't have the energy volume-wise, but certainly if we take a look at how these A, B equals CD patterns form, take a look at price. It was sliding right along the left side of that C to D leg, telling us that it was stronger than even coming off of the June 24th low, and most certainly that is the case out here. Now, it's also traveling, we're talking about the Dow futures, traveling with inside May 22nd, the high out there, 15,523. That area wants to be tagged. We've really only seen one bearish candle out here off of the June 24th low. That took place on June 28th out there. A couple days ago on Friday, July 12th, a little bit of a pause button, but that's all that it was yesterday. Just a continued slight trick up. Move up here. So the Dow wants to get up there and tag that level as well. If we go take a look at the NASDAQ futures, the NQ, let's go see what they have done out here. NASDAQ futures, in fact, are over that May 22nd swing point. The high there, 3,053. So where are they headed to? Well, you've got a 1 to 1.618, A to B equals CD. That'll take you to 3106.33 out there, give or take. And it's right now trading at 3,076. So you've got quite a ways. What's that, about a 40-point move or so? If we take a look at the expansions here of our May 22nd swing point high down to the low on June 24th, interestingly enough, the 1.272 butterfly sell pattern, that would complete right around the 31.17 mark out there. So somewhere between 3106, 3117, that in fact could be where the NASDAQ futures are headed to. Right now they are trading out at 3,076. You can see here in the NASDAQ futures, no bearish candles at all ever since the move up off of the June 24th low out there. Pretty impressive looking chart. And today should be let me just refresh my chart, make sure I've got everything out here. Make sure everything is fresh. Yeah, it sure is. That is quite if you like green, that is a pretty chart out there. Now, let's go take a look at the currency market. Let's go see what we've got going on inside the currency world. Let's go take a look at the real fuel to this jet engine in the marketplace, and that happens to be the euro-Japanese yen currency pair. If we take a look at it, it had formed a 1.272 expansion. Was not a Gartley pattern out here. We're taking a look at the current pattern. If you're watching us on TigerTV, if you're listening on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. The swing points for the A to B equals CD that we're looking at here in the euro yen are going to be your June 13th low, 124.94. That's your A point. Your B point out here was the high that came in on June 20th. That's up at 129.89. Your C point out here coming in at June 26th. In order for it to be a truly qualified Gartley, you need to have an A to B equals CD. 131.50. That would complete that pattern. We did get a move up to 131.10. So about 40 ticks away from that. Maybe that was a completion. What did really stop it in its place was this 1.272 expansion. But price has really been traveling with inside this candle here from July 3rd out there. We'll see if it can get a close above 130.85. That'll set up your move a little bit higher. That'll set up your nice Gartley sell pattern. This currency pair has made some very nice sell patterns out here. I believe the next one that'll take place once we get up into that 132 area. That's what we'll just simply call 132. Right now it's traveling out at 130.42. That'll be your energy. That'll be the energy in the market to go ahead and take the S&P up into that May 22nd swing point, maybe even close over it. The same thing in the Dow. And then inside the NDX, inside the Russell 2000, which has been the strong dog in this March higher out here. Maybe we'll have all patterns completing at the same time. That would be a beautiful thing. 877-927-6648. We get back. We're going to go take a look at all these equities here out with earnings, see what they're doing before the bell. We'll be right back, folks.
Yeah, it's always better when we're together.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Let's check in on some of these equities out here with numbers before the bell. Coca-Cola releasing their numbers. They generated revenues of $12.75 billion versus $13 billion, so a little bit slight on the operating revenue. Operating income, $3.24 billion versus $3.29. They're trading off a bit here this morning, down 3.5%. Last trades firing off in the 39.56 level, so not too much damage out here. If we take a look at the last swing point, which would be June 20th in this case here, that low is 38.97, 24 million shares, so that level should get tested. Now, if we just take a look at their stock chart here, I see a big high-volume spike out here from the 21st of September 2012. And the high on that bar is 38.74. That should act as pretty good support out here. That is 98 million shares. The stock chart does not look too bad. There was a small little sign of strength out here on April 16th, 32 million shares, a little bit of a gap up. That area really didn't hold, but on the way back down, if we take a look at volume here, I'm just going to go ahead and mark that breakout. This is really one of the things that you should be doing on your stock charts as well, identifying the high volume bars. You most certainly want to understand that because that'll help you to understand where a stock, where an equity will fall back to. In this case here, in the case of Coca-Cola, we're also going to mark and take a look at breakout areas. Now, breakout area, they're going to stick out very easily when you take a look at the stock chart. Oftentimes, you'll see a little bit of a gap, or you'll see some wide price spread. And you'll certainly see volume. And that's what that's what we're looking at here on April 16th. 32 million shares to the upside. And just simply by drawing the line across on the bottom of the screen, you can see that the pullback here really has been on lighter volume than that little breakout area. Now, the breakout did hold, and what I mean by that is we got a close below the April 15th session, the day before the equity actually had moved up. So, what does that mean? Well, it means that this area here, we see the high volume back on September 21st, really acting or should act as a support level right around 38.74, even the low of 37.88. That could be an area that would be tested unless there's some big volume that comes out of this equity here today. But so far where it's trading, not really a big deal on Coca-Cola. We had Johnson & Johnson out with the numbers J&J. Let's go take a look at their stock chart. That is trading up 1% this morning, so not a big deal. About 95 cents. Their numbers go like this. Net earnings, $7.3 billion versus $5.32, so they did a nice number there. Let's see here on the revenue side, $35.4 billion versus $32.6. So it's trading up, as I said, about 95 cents, right out at 90.40. And wait, no, that was the close, 91.20. Let me pull this back. So they're at. Let me put this on a monthly chart. Looks like they're at all-time highs out here. They most certainly are. So they're going to continue that trend. Now let's pull this back and see if we can see on the daily chart any kind of volume bars out here. And this is the dangerous thing. The big volume bar that sticks out on this equity, if it ever has a blown tire, takes you back to June 13th, and that price level is $64.70. That would be one heck of a haircut out there. On the way up off of that breakout session. Then the next volume bar is going to take you into October 18th. That's 72.74. That, too, would be a bit of a haircut out there. The equity here today is going to move into the extreme overbought territory with it moving up. And it just says, don't chase this. If you're looking to get in on Johnson & Johnson, wait for this thing to pull back. Where would it pull back to? Well, I'd say you got a little bit of a gap here, a little bit of a breakout back on the June 25th, June 26th area, maybe about the 85.59 area. Again, it's closed at 90.40 right now, trading out at 91.21 in the pre-market. We had Mosaic, MOS, out with earnings. Let's go take a look at that stock chart out here. That's trading up just a bit here, about 0.5% or more this morning. MOS, again, being the ticker symbol, they closed at 56.13 out here. This has a nice island bottom reversal candle, very bullish candlestick pattern out here. Numbers that they generated, $2.1 billion in revenues versus, or $2.2 billion versus 2.6 from the prior year. 1.9 in net income versus 1.9, so kind of flat out there. And if we take a look at this equity here, take a look at some volume on the downside. So this is trading out. Let's see what it's trading into. It's trading at 56.53 out here. And at 56.53, really not going to do much. It's not even going to take, this is in a bit of a downtrend here. Let's take a look at the A to B equals CD that has completed so far. It'd come off of the high here in Mosaic. That would be your May 8th high. That's your A point. Your B point is down here on May 23rd, and your C point out here being May 30th. So it's completed a 1 to 1.272. Maybe wants to come all the way back to where that island reversal was. That might end up being a nice buy if it can get back and test the November 19th area and hold at 49.98. Boy, it's good to be back. 877-927-6648. Give us a call, folks. We'll be right back.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
We're off to the races, but they forgot to open the gates. Now it's off 192, S&P up 71 cents, Composite up $2, Russell 2000 down 21 cents. Looks like the horses are just hanging out and partying in the gates. A flat market out here. Not in the case of Google. That's off $5 this morning, trading out at 9.20. Apple's off $1.44. Microsoft down 6 ticks right now. Intel up 11 ticks. Cisco up 3 pennies. To the upside, Baidu up $5.13. That is leading the charge here. Baidu, I don't see anything. They plan to acquire 91 Wireless out there. You got Bally Technologies, BWI is their ticker symbol. They are up 7% here this morning. You've got Shuffle Entertainment, SHFL. Looks like a lot going on inside the gambling industry. Let's see, what do we have here for Shuffle Entertainment? Bally Tech is to buy Shuffle. Okay, so there's your 21% premium out there. Rio Tinto, RIO, up $1.41. That's up 3%. HCA Holdings up 4% here. BHP Built-in, they are up about 2% here this morning. Let's see, what else do we have? Got Johnson & Johnson, Dover Corp up about 1%. Caterpillar up 1% out here. To the downside, Liquidity Services, apparently not so liquid this morning. LQDT down 13% out here. Looks like they have lowered their guidance down $4. Google right behind them. Tesla Motors off $3 here. You've got QIHU 360 Technology. They're off 4% this morning, down $2. Icky Bank, IBN, they're off $1.51. YY Inc. off $1.76. Ensco PLC ESV off $1.17. Delphi Automotive down $1.26. Again, our call-in number 877-927-6648. Give us a call. We can take a look at your stock. Let's go peek into the markets around the world. Let's go see what we've got going on over across the pond here. Right now we've got the DAX trade out at 82.06. It's off of its session high. In fact, it opened up this morning at a price point of 82.51 and has sort of been selling off ever since. Now what the DAX here did while I was away, we drew this pattern in ahead of time. This was the Gartley sell pattern, the 0.618 Gartley sell pattern. And at a price projection completion right around the 82.20 level at 82.13, we had a 0.618 retracement. At the 82.20-ish level, we had also a 1.618 expansion of our B2C swing point out here. If, in fact, the DAX closes today below 81.92 out there, you'll get a bearish engulfing, and quite frankly, you'll get a confirmation of the sell signal inside the DAX out here. Short of that, then what this could be doing is really setting up the next move, which would be the 0.786 Gartley sell, taking it 83.64. So one thing at a time. This has completed its pattern. As it gets up here, it would also make sense that it would go ahead and move sideways a bit. But if you do get it closed today below 81 cents. So at 11:30 during the Basil's show, if we do see a close below 81.92.91, you'll get a bearish engulfing candle, and that would be a signal that the DAX wants to retreat a bit. Let's go see what the FTSE is doing out here, see what patterns we've got going inside the FTSE over in the UK. That, too, completing a pattern here simultaneously, instead of going after their highs. This is how weak the markets are out here inside the worldwide markets. If we go take a look at the FTSE here, the FTSE and the DAX nowhere near the May 22nd, or I'll say at least the FTSE here is nowhere near, well, at the DAX as well, nowhere near the May 22nd high versus our markets. If we take a look at the FTSE, it did go ahead and complete that 0.618 Gartley sell pattern. It did that here on Friday. On Monday's action out here, it looks like a shooting star as well. Today trying to move higher, so it is running into some resistance right out here in this Gartley sell pattern. If it does move higher, would be no problem for it to go up into that 0.786 retracement of us coming off of the May 22nd high down to the low that was put in on June 24th. That would be 66.94 out here. No reversal candle. Well, you had the shooting star yesterday, but today's session, let me just make sure my chart is updated here. Give me a moment. There we go. Okay. No. So now that it's updated, that was Friday's session here, was the shooting star. Yesterday, it just simply negated that. And the FTSE here really signaling that it actually wants some higher price. It wants to go party up at the 66.94 level. Let me go back to the DAX, make sure, because this system here was just, I'm just going to update this, just make sure that I gave you the right number here. On the DAX. No, on the DAX there as well. It didn't update it for yesterday's trading session. But still, the numbers end up being the same with regard to a close below inside the DAX. That was the open here was 81.92. That would give you a reversal signal. If we take a look at the Shanghai here, Shanghai, so I've got to update all these charts. I've got to hit a button out here. Inside the Shanghai, that still actually is a bullish-looking chart to me. Had that nice hammer candle after creating that 1.272 butterfly buy opportunity. It's just hanging out around the 0.382 level, letting some folks off of the elevator out here. The Shanghai wants to move up into the 2320 mark. Let's go take a look here at the Nikkei, see what it is doing. Let me update this. I'm going to have to make sure I do this on every chart here today. If we take a look here at the Nikkei, it actually has formed the 0.618 Gartley sell, but it did that really on the trading session of July 18th, where it had a key reversal bearish engulfing session. That really is negated here. That says to me that, the Nikkei actually wants higher price. Looks like the Nikkei may want to get up into the 15,187 mark out there. It is showing a bit of a pause here today with a doji candle, and you have to be concerned with that as it comes into a resistance area. We know we've got this nice Gartley sell pattern, and it's really traveling and sitting right here at the 0.618 retracement. So I would say this evening's candle will be very important, very telling inside the Nikkei. You get a move or a close below today's close, which, by the way, is 14,599. You'll see some leaves falling off of the tree, and maybe the first signal here that this wanted to make its move down was that, in fact, that key reversal session here that just really didn't seem to hold with today's close inside the Nikkei. Let's see. That leaves us with what? The Hang Seng out here. Let's go take a look at the Hang Seng, see what pattern it has setting up here. As we update this chart, looks like it closed at 21,312. So a couple of high wave-ish doji-type candles out here, but it too wants a bit higher price. It's being held in check by this gap down back in the June 11th. That's when they were on one of their holidays out here. But it does look like the Hang Seng wants to move up to the no reason for it to not go ahead and move all the way up to 22,218, where it will form its next Gartley sell pattern in the marketplace. Let's check out gold, silver, see what the metals market here is doing. You've got gold right now traveling out at $12.90 as it inches its way up into the 1321.50 level. As it continues to inch its way up, eventually we're going to see a short covering rally here that should be pretty massive, pretty big. And I suppose when it gets up in that 1321 level, maybe that's when things start to really unleash. Well, I'll tell you, get it closed inside there, that would likely scare the heck out of, you knew what I was going to say, but it's likely will scare the heck out of the shorts inside the gold marketplace. If we take a look at silver here, silver Not as strong as Goldilocks, but still it is above the candle that I like to see it above, which is June 26th out there. But not a lot of oomph inside silver, but its next target here is to get above 21.28. It wants to get into the 22 level out here, and I suspect that we will see that take place. Light sweet crude here, not a good scene. Light sweet crude up another 20 cents here this morning. This wants higher price. You know, it wants that 114. It wants to go ahead and complete the breakout of that consolidation, that one-year consolidation pattern that it was traveling in. And so it wants to move up into the 114 level. Right now, traveling out at 106.58. If we go take a look at the bonds, see what bonds are doing here this morning. Bonds have actually now, with today's session, of course, it really didn't have much choice otherwise, but it broke the descending price channel that it had been traveling in, and that's coming off of the May 3rd candlestick, the open of that May 3rd session, and today breaking through that. But this channel here is so tight and so small, I'm not going to really give much weight to the breakout of that price channel, so much so I'm going to actually go ahead and delete it right now. The key here is, in order for this to really get bullish, is a close above at least the body, and that is of the July 5th candle, and that is of the price point of 135.15 out there. If you can get above that, then I could be a believer. Even better yet, if it closes above 136, then what we will see is more than just the bonds working off a oversold condition, which is what we have going on here right now, because price is traveling with inside that July 5th bar out there. And then that sets up a move into the 0.382 retracement, 138.25. Of course, a really nice sell area here inside bonds would be 142.30. That would be your 0.618 retracement here. But right now, I'm not giving you much bullish suggestion here. Yeah, you're seeing some higher lows out there, but, boy, you have to really be careful of that candle from July 5th out there, because that is giving you all kinds of information. Let's go check out natural gas out here. See what it is doing. We'll take a look at the continuous contract, and not really doing much of anything, just hanging out around the 0.618 retracement level, coming off of the low out here from that price channel that it had been traveling in for quite some time, that being the low of February 18th all the way to the high that was put in that shooting star on May 1st out here right now, just hanging out at that 0.618 level. Looks to me like 340 might be a nicer potential buy inside natural gas out there. If we go look at the currency market, I know we looked at the euro yen, but let's go take a look at the other currency pairs. Let's go see what's going on inside the queen out here. Let's take a look at the euro US dollar. It looks like it had that nice bounce out here on the trading session of July 10th. That was one heck of a bullish engulfing candle. Of course, we knew that it was going to find some support as it got down and made that 100% move of a move, getting back in that April 4th level out here. But it's had one heck of a bounce. Now, let me get rid of a couple of retracement lines out here. Let's just clean that up so we're clear as far as what it is that we are looking at. Now, what we're going to look at is just simply off of this last leg down. Let's go see what the retracement level has been. So we're going to come off of the high from June 18th, 1.3414 out here, all the way down to the low that came in on July 9th. And you can see, in two trading sessions, it got back to the 0.618 area. That's not a positive. Well, it's a positive seeing with regard to the euro moving higher out here. So looks like the euro may want to get up to 132.73. Now, if we take a look at coming all the way off of the highs here, I want to see if we've got any convergence of retracement numbers to the February 1st high, all the way down to that low that was put in a few trading sessions ago on July 9th out here. Right now, it's really at the dead cat bounce area. 131.92. You're at 131.17 was your 0.382 retracement level. So you get a close above here. We haven't seen any bearish candles really. Let me just make sure this chart is also updated. I hate to do that. There we go. Okay, so no real bearish candles here yet inside the euro. So it does look like the euro wants to get up to 1.327 as its next move, as it continues to work off that oversold condition. Let's go take a look at the Great British Pound. We know that was moving into a support area set up by that hammer candle. That's why you really want to make sure that you understand your candlesticks, because they will help you to read the message of the markets out here. Inside the pound, the pound was pounding down right into that hammer candle, actually tested it. That was the March 12th low. That number, 1.483. It got down and tagged that level on July 9th. That area held, so now we know clearly where the bulls are hanging out. You got a nice bullish engulfing candle on the following session, meaning July 10th. Now as we take a look at just coming off that last leg down, what the pound has done, it's made the 0.382 retracement, came in there with a wide-ranging bar. You can see price here traveling with inside this bar here right now. It says that the pound is really just setting up your A to B equals CD up of its next sell pattern. Look, so that A to B equals CD up, it could be like that. You could even see a little bit more of a retracement. But right now, that A to B equals CD up will take you into, I would say, the sell area on the pound is at about 1.5546. That would be your 0.786 retracement of this last leg down, and it would be a 1 to 1.272 A to B equals CD. We go take a look and see what that pattern would look like, colored in and drawn here. Let's go see what kind of retracements we've got. How about that? So I just drew that pattern. That's the beauty about taking a look at these Gartley buy and sell patterns, because they are leading indicators. Ahead of time, you are drawing these things in on your chart out here. I'm going to go ahead and get rid of the formation tool, the A to B equals CD pattern that we had drawn in here. Let's go ahead and get rid of the retracement levels as well. So if we take a look at, so that's the cool thing, is that you can be sitting here, you can be camped out, waiting for the next potential, and I do say potential because you need to make sure that just because you've identified the likely pattern, that you got to wait for the bears to jump on board here. You don't want to jump on board too early, because then you get trampled on. In this case here, you can see a 0.786 Gartley sell pattern with a nice 2.618 expansion of your B to C swing point would take place right around 1.554. Now that's the range, that's the number. That doesn't mean that's what it is that's going to get hit out there, but that is the range that we will be looking for as your next sell signal here inside the Great British Pound. Know that it's going to find some support, though, as it moves down into that March 12th level at 1.483, because the bulls, whoever they are clearly hanging out down there. Thank you so much for hanging out with us here at TFNN. Right now, the Dow's off 16, S&P is down 3. We'll be right back.
Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Right now we got the Dow off 17 points, S&P down a couple, so pretty flat market out here. Let's go take a look at some areas that are not so flat here right now. We've got liquidity resources, liquidity services, LQDT. That is a gap down this morning here. Volume so far behind the move today, 538,000 shares out here. This thing has been in a nice downtrend out here. Had some big volume come out of this baby on July 3rd, 2012, a year ago. 2.7 million shares. We saw here another move down, big volume down, gap down. That was on January 31st out here. In fact, let me just delete a couple things off of the screen, make it a little bit easier for us to take a look at this equity, get an idea of what it is. I only got one of them. Let's see here. Let's get rid of that. That'll work here. In fact, let me just get rid of everything. There we go. So we'll get a clean chart. So if we take a look at this, here's an equity here that came back into an area where it had broken down. Now, what I'm looking at, folks, is the January 31st of this year. Gaps down with 7.3 million shares. Now, another sign of volume coming out of this equity. And all that it did, just as we teach you how to buy breakouts, you want to learn how to buy breakdowns. It's really just flipping that around. And this equity here, if you take a look at January 30th, 614,000 shares out there. The high of that was 41.40. The low, 40.20. This equity gets back there. When I say gets back there, with 298,000 shares on May 31st. That was 298, really going against 7.3 million. But even against the breakout of 614, that's a beauty. That was a beauty set up here. And then, in fact, you got some bearish signals. You got that little doji. See how that doji candle, if I open this up on the chart here, how the doji, using the doji up in the resistance levels, I'll just draw the line across the screen out here, how it is so helpful. Really gives you so much information up around resistance, tells you that a market is tired coming into an area because it fought its way all the way back up to the area where it fell off of the chart planet, and then it just simply continued to move down. Wide price spread, accelerating volume on June 7th, 1.2 million shares out there. Let's put this on a longer term. Let's put this on a weekly chart out here, see where this thing might end up falling down to. Looks like this is going to come all the way back into a original breakout area here, which will take us all the way back into the levels of about $19.89. That's after making a high out here on June of 2012, out in the $66 range out there. So that is on liquidity services. Let's see what else we've got. Let's go take a look at something moving to the upside here. Let's go finish on a positive note. Let's take a look at gold, Rand Gold out here. GOLD is the ticker symbol. They're up 3.5% here this morning. Nice little sign of strength. That was on July 11th, a couple trading sessions ago. Did volume on that day of 2 million shares, pulled back yesterday with 850,000 shares, even going against the 884, that gap up from July 10th out here. So this morning, if we take a look at Rand Gold, it's up 209,000 shares, and if they can close above $68, most certainly if it can close above it with more than 2 million shares, this will have set up its first A to B equals CD up. And that's going to be important to watch. That A to B equals CD up, that would take you into 7207, 7220, 7424 out there in the marketplace. So you'll want to pay attention to this one. Not volume so far with only 28 minutes of trading, not too bad. 210,000 again, going against 2 million shares with that move up off of the bottom wide price spread accelerated volume from July 11th. Folks, always so great to be back here with you. Always remember this. You have an amazing power within yourself, and that power is so strong. It'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Tuesday. Look forward to seeing you soon.
Yeah, it's always better when we're together.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.